This strategy will blow your mind. You see, you may have given up in the past on indicator trading, but this moving average trading strategy is going to be the reason why you will start making profits again in your trading account. The reason why a lot of traders are not making profits in the market, especially when trading the moving averages, is because they keep trading them the wrong way. But when you start trading them in the right ways, with which they are supposed to be traded, your understanding will be expanded, and you'll begin to notice how easy and simple making profits with moving averages can be. In this video, you're going to learn the best moving average trading strategy that you can use for both day trading and scalping. But before we get into all of that, do well to like this video and subscribe to our channel. If you are encountering us for the first time, now my tribe soldiers, let's get down into this business. Before I start teaching you about this strategy, how it works, and start giving you examples of the strategy at work on the chart, we need to first of all understand what we are actually dealing with. What really are moving averages? Okay, moving averages are trending indicators that helps us to smooth out the price action of an asset and give us the main trend direction of an asset according to the parameters that has been set with the moving average. The moving average movements can be different based on the type of moving average that we are using to analyze the market. The major types of moving average includes the simple moving average, the exponential moving average, and the smooth moving average. Another factor that affects the effectiveness of a moving average is the period of the moving average. It could be a 50-period moving average, the 100-period moving average, or more. For our strategy, we are going to be making use of the 200-period exponential moving average. The exponential moving averages are the best for trending markets and the most used type of moving average among traders. That is what you're going to be using to make money from the market. The only price action strategy that is similar to the moving average is the trend line. So when you are using the exponential moving average, the market will give you the same thing that you will get from drawing a trend line. And even better, in order to get the 200 exponential moving average on your chart, if you are using TradingView, go to the Indicators tab and search for Moving Average Exponential. Click on it, then change the length to 200, and then you will have your 200 exponential moving average. You can increase the thickness or change the color, but for this strategy, we are going to be using the blue color. And if you are on MetaTrader 5, go to the Indicators tab and click on Moving Average, then change the period to 200 and the moving average type to exponential moving average, and you will have it on your chart. Now, in order for this strategy to work effectively, there are few things that you have to do. Since this moving average is a single moving average, we are going to be applying some price action to it. To make it very effective, we are going to apply a price action movement called a break of structure. But before that, here is how we want our moving average to appear. Before we look out for a break of structure, it is very simple and clear. If you see the market moving above the moving average, we are looking out for buying opportunities, and if the market is moving below the moving average, we are looking out for selling opportunities. The main problem is all in the traditional way of trading moving averages. The way many traders do. Traders will say that when the price touches the moving average, then you can take a trade, but that is wrong. Take a look at the chart, and you will see that strategy failing a lot of time, because the market does not work that way. You can't take a trade just because the market touched the moving average. You will need some extra confirmation to be able to confirm the setup. So, here is what we want to see to be able to take a trade using this moving average. Using this setup as an example, the first thing we want to see is that we want to see the market touch the moving average line. And when it has touched the moving average line, you look back to the previous price movement and make sure that there was a break of structure before the market touched the moving average line. You need to see this break of structure appear to be able to boldly look out for taking an entry on the moving average line. This break of structure shows us that the buyers are still showing great strength in the market by breaking the structures of the sellers. So when it retraces to our moving average line, It is just another break to continue moving the market in the right direction. This makes it a very important part of our strategy. Now, there is one more important ingredient that we need to let this strategy cook. But before we get to that, let me quickly introduce you to our mentorship program. Trading Tribe has an ongoing mentorship program, a 2-month course to turn you from a losing trader to a profitable trader. And you are not only going to be learning my personal advanced trading strategy that I use to make thousands of dollars in the market daily. You will also be getting up to 1 to 3 daily VIP trading signals and analysis on major currency pairs and derivative synthetic indices from the same strategy that you'll be learning in the course. Both the mentorship program and trade signals last for 2 months. To get access to our mentorship program, click the first link in the description box below. Now, that final ingredient that we need to get this strategy going is an entry candle. What is a trading strategy without an entry candle? It's like a burning candle without a wick. It's like a car without a car key. This is what turns on the ignition of every trade that is traded with a strategy. Trading the market blindly, just because you have seen a good setup structure, is what is responsible for 50% of the losing trades in the market, price action included. A lot of traders have lost a lot of money by placing limit orders or just not waiting for the entry candle to close before trading it. In fact, these entry candles are so important that in my mentorship program, I teach 20% market structure and 80% entry candle setups, making it the best mentorship program in financial market. And one of the entry candles that I like to use the most for my trades is the engulfing candle. This engulfing candle, be it the bearish engulfing candle or the bullish engulfing candle, shows us the trend and the power of the dominant trend in the market. So if you are in an uptrend and you see a bullish engulfing candle after price has touched the 200 exponential moving average line, take that bullish engulfing candle very serious. And if you're in a downtrend and you see a bearish engulfing candle appear after touching the moving average line, take that bearish engulfing candle very serious. So what does this mean? It means that whenever you are trading with this moving average strategy, all you need is an engulfing candle to appear in order to take a trade. For example, here we are in an uptrend. So when you see an engulfing candle appear on this moving average line, you take a trade, placing your stop loss below the end of the candle and your take profit together at the next high. There are still some good game that I want to give you on this strategy, but I will be telling you that as we move on with the examples of this strategy at work on the chart. Now, let's take a look at another example. On this chart, you can see that the market is moving above the moving average line, meaning that we are in an uptrend. And here the market touched the moving average line, but just before it touched it, something happened here. The market did a break of structure, giving us a clear sign that the buyers are still taking over the market. And since we have these two conditions met, we will be looking out for the third piece of the puzzle, and that is an entry candle. And right here, you can see that the market touched the line, but it didn't give us an entry candle. But when the market moved a little bit below it, it gave us a bullish engulfing candle. And you already know that when you see a bullish engulfing candle, you know it's a green light to enter a trade. So from this point we can now take our trade, placing our stop loss below the engulfing candle and our take profit target at the next high. And as you can see here, our take profit target was hit successfully. A beautiful, wonderful trade. Now, let's take a look at another example. Right here, we also have a wonderful price movement, moving above the moving average line, which indicates that the market is moving in a strong buying power. So we are looking out for opportunities to buy. And right here, the market touched the moving average line. And right before it touched it also, there was a break of structure, which is showing us that the market is still moving in the strength of the buyers. And when we have seen that, the next thing we are looking out for is our entry candle. But before that, I want to give you guys a clear warning when trading this strategy. Listen, Anytime you see the market touch the moving average line and start moving below significantly before giving you an engulfing candle, that is a red flag and a trap. And when this type of stuff happens, you are already going down the drain, so it is best you leave the setup and focus on better setups. Always make sure that the engulfing candle showed up on the moving average line and not down below the moving average line. So on this example, you can see that the engulfing candle did not go down the moving average line. So we can take a trade upon seeing this bullish engulfing candle. And when we have done that, we place our stop loss below the engulfing candle and our take profit target at the next high. And as you can see, our take profit target was hit successfully, making it a successful trade. Trading moving average can be very simple if you follow the rules that guides it, and sometimes this setup takes time to form, so you must be patient and wait for it to align. With everything that we have said in this video, in the next video that will appear on your screen right now, I will be teaching you on how to trade Bollinger Bands in the easiest and simplest way ever. You will learn how to trade this life-saving indicator with ease in the market, making profit in different ways. Tell me your thoughts in the comment section, and I will see you there, my tribe soldiers.